What's going on, guys? I hope everyone is going to enjoy their day tomorrow. Happy Thanksgiving if you guys are celebrating. Today is Wednesday, the 24th. And what I want to do is break down some charts over the next 24, 36 hours before we have, sort of a minimum day on Friday. Friday, I'm not really looking to do too much as far as putting on any big trades with anything of any size. But what I'm going to do is I'm going to eliminate a lot of the noise um, as far as, what's going on in the news, what's going on with the Fed talk, what was, are we oversupply, undersupply, looking at all the moving averages. I think this week the volume has sort of dried up a lot. Nobody is in any big rush to push the market higher. We already had our pullback into the 20 on the triple Qs. So a decent pullback that we had, not too much, maybe 2-3% pullback. But I think if the market is going to ramp up higher into December, it's, that was necessary. So I think we're going to do a little bit of consolidation, a little bit of distribution, possibly going into Friday, possibly going into Monday, Tuesday, and then kind of see how we start the month in the month of December. So what I want to focus on going into Friday and next week is kind of just simplifying the process, taking more of a scalping approach to it. So eliminating a lot of the supply and demand zones and kind of just playing it from a scalper's perspective. I was going through some of the charts today, some of the movers. Um, if you take a look at Apple here, Apple was up 53 cents on the day. Pretty much flat at 0.33% on the day, pretty much flat. But Apple did give a good trade, gave a point move in the day, and you could have capitalized on that. But I think that when you start to look at, previous days highs and, upper supply and bottom demand zones, and you start to overwhelm yourself, I can't get in here, I can't buy here, I got to wait for this, instead of simplifying the process, kind of narrowing in on the price action and what's in front of you versus what you think it's going to happen or what you think is going to happen when it gets to that supply and demand zone. Now, don't get me wrong, supply and demand zones, the moving averages are extremely, extremely important when it comes to macro breakouts, when it comes to swing trading, when it comes to overall market sentiment. But when we're breaking this down on a small scale and we're talking about, getting in, possibly going in with some size, scalping a position, I think that we could kind of eliminate the noise. And I'm going to show you exactly what I'm talking about here with Apple. This is today's time frame on the 5-minute chart here. This first candle here that I just made a line on is going to be the 630 candle. So what we're going to be looking for here is we're going to be looking for either a push, a surge off of the 20 period moving average, which is this purple line here that I have drawn on the screen, or we are looking to be trading under the 20 period moving average and then reclaim the 20 period moving average. And I want to make this as simple as possible so anyone can understand it. So market opens at 6:30. We do get this push off of the 20 period moving average. What we would be looking for if it was going to continue to go higher from here is we would be looking for confirmation over this top wick and to be trading this way. The 162.18 was previous day's high, so you could expect some resistance here. You might want to take some profits here, see if we consolidate, push higher, and then now turn this into a little bit of support and keep continuing to push higher. However, big push off of the open, long wick down in the first 5 minutes, something that you want to stay away from. Next candle at 6:35 confirms the 20 period moving average, gives a big surge. So what we would be looking for here is a confirmation of this candle to take out this price action and now start to work its way higher. Remember, this is going to be some resistance. Take profits here, see if we bust through and turn this into a level of support. Okay. However, that did not happen. So we broke through the 20 period moving average, came down, tested previous day's lows, bounced up, and here we start to consolidate. Okay. So if we take a look at this, obviously with the day being over and the chart being still, this is a little bit of consolidation here. This here under the 20 period moving average, we start to consolidate here. And then we get this first close over the 20 period moving average. So what we would be looking to do is to confirm either this candle's close or the top wick. If we have a little bit of a top wick like this one here, I like to use the top wick. As soon as this price action confirms this top wick, I would like to get long. You can see here, we make this push and a first close over the 20 period moving average. We come back and test the 20 period moving average, and then we get this surge here. This is where you would be taking entry, and this price here is going to be around 160, 50, 160, 60, depending on slippage. First push is going to be to 160.90, come back down. Obviously, our stop on a play like this is going to be our entry candles low. So entry candles low. If you want to put a little bit of a tighter stop, you could use the 20 period moving average. First close below, if you don't take profits, would also be your stop. But you can see here, as soon as we confirm here, we make one push up higher, come back down, back test, and then we start to get this nice little pop here. And this move, okay, from entry to where we get our first, sort of sideways consolidation candle here is 161.78. So if you took this play here at 160.50, 160.60, 161.77, that's about $1 move. You take 10 contracts, 5 contracts, 20 contracts, 100 contracts, you take 1,000 shares, you just made $1,000 in less than let's see here, 7:30 to 8:30 in 1 hour. You got $1 push in 1 hour. I think that's how I'm going to play Friday. I'm going to kind of simplify things. I'm just going to use a 20 period moving average. I'm just going to use look for a breakout over the 20 period moving average, get that confirmation here, and then sort of take it from there. You can also play it to the downside here. First close below the 20 period moving average. 161 would be your entry here as soon as we confirm that low. As soon as we confirmed that low, we confirmed it here, and we kind of made a push from 161 down to 160.66 for all you scalpers. Also, here's another play here. Trading under the 20 period moving average, first close over the 20 period moving average, which is here. First close over the 20 period moving average. What we would be looking for is confirmation of either the closing or the top wick. As soon as we get that in this candle here, this would be our entry. We would ride this up as long as we are staying above the 20 period moving average. This move here was an entry price of around 161.20, and we came to highs of 161.98, so about a 60 to 75 cent move. Going into the close, obviously, you would want to close out your position here, being that it was a scalp. I'm going to kind of do this breakdown on a few more charts that, quite honestly, I missed a ton of trades because I was looking so much at the bigger picture and not actually what was going on inside on a very, very simpler form. So I'm going to go ahead and try to do that. I hope you guys like this video. Please subscribe to the channel. Join the Discord that's down in the link description box below. Also, I have a link to my website that is also down in the description box below, and I will see you guys all on the next video.